Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal and here's a look at the stories for the day.
What the world needs now is people who see flight a little bit differently. Because seeing a better connected world isn't far in the future. We're building it now. GE, building a world that works.
Amid the race to hire and retain talents, several information technology companies are outdoing each other in doling out attractive packages and bonuses. HCL has taken the lead by substantially increasing the fresher pay packages. TCS is giving double-digit raises up to 25%. Will such hikes become the new norm? Watch our next report to know.
India's third largest software services exporter, HCL Technologies, recently took everyone by surprise. It decided to raise fresher pay packages from 3.6 lakh rupees per annum to 4.25 lakh for FY23. This new package would also be applicable to those freshers who joined the firm in FY22. Last year, mid-sized IT firm Happiest Minds Technologies reportedly increased its fresher salaries to 5.5 lakh rupees, which includes a base salary of 4.25 lakh rupees and the rest being joining bonus. Freshers' salaries have remained stagnant between 2.5 lakh to 3.5 lakh rupees for a decade now. In a bid to attract fresh talent and keep them for longer to counter the impact of rising voluntary attrition rate, companies are giving joining bonuses, double-digit pay hikes and promotions. Some employees are seeing their salaries double when they switch jobs. According to a news report, Infosys, which reported a 27.7% attrition rate last quarter, plans to have an average salary hike of 12 to 13%. High potential employees will get increases of 22 to 23%. Globally too, tech talent is being rewarded as never before. Microsoft said it will nearly double its budget for employee salaries and boost the range of stock compensation it gives workers by at least 25%, mainly affecting early to mid-career employees. Shiv Agrawal, managing director at recruitment firm ABC Consultants, believes that the recent salary hikes are among the highest ever. An HR executive told Business Standard that salary hikes at TCS are already in double digits, and in some cases it is upwards of 25%. In the third quarter of FY22, TCS had given promotions to over 110,000 employees. At Wipro, the company announced that at the junior level, promotions will happen on a quarterly basis. Employee costs for the top 5 Indian IT services companies have touched an all-time high of 2.85 trillion rupees last fiscal, driven by strong fresher hiring and pay hikes. They grew between 15% to 35% for these companies. Universities that see bulk hiring noted that differential hiring has gone up. What this means is that based on a student's skills, he or she can attract a higher package. TCS has a program called TCS Digital that looks at hiring students with specialization, and the pay package starts from 7 lakh rupees. Cognizant's Digital Next, for which if selected, a fresher can get a starting pay package of 6.75 lakh rupees. Wipro Turbo, a similar program from Wipro, can take a student's salary package to 6.5 lakh rupees.
Salary hikes are purely driven by a demand-supply gap. Having said that, industry has been witnessing headwinds with consistent revenue and profitability growth, which should translate to larger wage bills in order to meet the demand. One can clearly see a directional shift towards higher salary hikes if the upward trend continues. HCL has bitten the bullet first, as it has thriving products and platforms businesses which need more competitive talent. We definitely think others will follow suit by introducing differentiated pay, as the demand is shifting towards highly skilled talent with AI, ML, data science, cloud, blockchain, and so many other emerging technologies. Eventually, as seen with global organizations like Amazon and Microsoft, Indian IT services providers will also adopt a higher pay structure to fight the twin battle of demand upsurge and high attrition.
The sector had seen major layoffs just before the pandemic. Companies are now trying to fill the gap to cater to the strong post-pandemic demand pipeline. For long, enterprises have had the command over the pay, and this seems to be changing now. While IT companies have been managing their operational costs by keeping a tight check on the fresher salaries, they may find it difficult to attract new talent now at the old packages. We can therefore expect the industry to settle at an overall higher pay structure even after the current talent supply issue is resolved.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 Paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Like the IT companies, the government too wants to raise the bar. Prime Minister Narendra Modi on Tuesday said that India is planning to launch 6G services by the end of this decade. But are we ready? The 5G launch still looks like a distant dream, and a big chunk of the population is struggling with slow 4G speed. Our next report does a reality check.
Connectivity will decide the progress of country in the 21st century, Prime Minister Narendra Modi said at an event organized by TRAI or Telecom Regulatory Authority of India, where he unveiled the 5G testbeds for companies to test and validate their products, services and use cases. PM Modi also said that India is targeting the rollout of 6G telecom network by the end of the decade. The PM's announcement may set things in motion for a timely rollout of 5G services and put India ahead of the curve at the time of launching 6G, believes COAI Director General, Lieutenant General Dr. S.P. Kochar.
The Prime Minister's inauguration of the 5G test bed yesterday is a big step towards indigenization of 5G and speeding up the rollout of 5G. The government is very serious and they have a roadmap which is well thought of, well articulated, and they're going as per the roadmap. So 5G is on track. 6G has started. Work on 6G has already started, and there are committees made on that. COI is also part of that committee. The committees have been divided into 6 subcommittees. Each subcommittee is looking after a specific subject, and as a whole, when we put together the results of these subcommittees, we will be able to chart out a path of 6G, not only for India but for the world. And because we have started early, we will be able to be a leader in this field and possibly have our standards which will be accepted internationally. So we are on the right path.
We may get ahead of the curve in future for 6G because we are starting early. But are we on track for timely rollout of 5G services? While many countries across the world have rolled out 5G services, India is yet to auction the 5G airwaves, let alone the commercial rollout. According to Ookla's 5G network tracker, India is one of the few major countries with 5G network. Countries like France and Germany have extremely dense 5G coverage. Apart from European countries, China, Australia, the US, several South American countries and a few African countries also have 5G in some capacity. For context on where we stand today, let's take a look at what Bharti Airtel management said in a post-earnings conference call on Wednesday. The company believes that it will take another 3 to 4 years to cover most part of urban India. But why do we need 5G for connectivity when 4G is capable of high-speed data services? Well, the answer is simple. We have a wide coverage of 4G networks in the country, but speed is as good as 2G. According to Ookla's Global Ranking Index, India is positioned at 118th with 14.19 Mbps medium mobile download speed in April. In comparison, 4G speed in the US ranges between 35 to 40 Mbps. That said, it is vital to take steps now to have better speed on 5G along with wide network coverage. Otherwise, it will be the repeat of 3G and 4G for India. Besides the delay in 5G network rollout and abysmal 4G speeds, there is a legacy issue of mobile users stuck on 2G network. It needs immediate attention if the country has to move to a fully functioning digital economy where ultra-fast connectivity takes precedent. India is home to more than 1.16 billion telecom users according to TRAI subscriber report for March 2022. Of them, about 350 million users are on the 2G network. Telecom operators and mobile phone makers have made efforts to bring 2G users to 4G network, but the pace of progress has been slow due to premium price factors associated with 4G data tariffs and smartphones. With telecoms stretching their revenue benchmarks and rising prices of smartphones due to component shortage, it might become an uphill task to move the substantial user base on 2G network to 4G and 5G thereafter.
Average selling prices of smartphones are on the rise. Recent tariff hikes by telcos have led to a decline in data consumption as well as 4G user additions. The users at the bottom of the pyramid are suffering from rising inflation and do not have the disposable income to spend more on smartphones. If you were to talk about the aspirations, users at the bottom of the pyramid are looking for smartphones with superior build quality and strong performance. They're looking for devices which enable them to solve for the 3 V's: voice, video, and vernacular, and through which they can connect to India's growing digital economy. So what can telcos possibly do? Telcos can look at solving not just for affordability in terms of the device itself, but also specific plans catering to the users of this segment.
According to a report, rural India has seen 45% growth in active internet users since 2019. The report said that India has 646 million active internet users aged 2 years and above as of December 2021. But the study also revealed that almost 60% of the rural population is still not actively using the internet, paving headroom for further growth. Rising ambition and dependence on technology will drive the future growth of mobile phone and internet service providers. But a speedy rollout of an advanced mobile network is the key.
यार
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 Paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Meanwhile, the shares of Bharti Airtel nosedived on Wednesday, even after it posted more than twofold year-on-year jump in its consolidated net profit. The sharp correction in equity markets has taken a toll on mid and small cap stocks that have underperformed their large cap peers. From the lifetime peaks, broader indices have tumbled up to 20% as against a 13 to 14% slide in benchmarks. However, analysts expect these two segments to clock a sharp rebound once the dust around the near-term uncertainties settles and economic growth prospects become clear. Let's see how.
Equity markets seem to be in the midst of a perfect storm, displaying an extreme volatility. The concerns related to inflationary pressure and policy tightening by global central banks seem to have got exacerbated in the past couple of months, especially with the long-drawn geopolitical crisis in Europe and the fresh wave of COVID-19 in China. Over the past month, the benchmark S&P BSE Sensex and the Nifty 50 indices have declined over 5% each, while the BSE Mid-Cap Index has cracked over 8%. The BSE Small Cap Index, on the other hand, has plunged nearly 10%. Such a slide in the indices came as investors gauged the spillover effects of the macro headwinds such as inflation, margin pressure across sectors, and the cautious commentaries by various corporates. According to analysts, there are increasing concerns building up on the possibility of a stagflationary scenario, which, coupled with rising bond yields, does not bode well for equities as an asset class. The rising dollar index and the persistent selling by the FIIs are also not helping the cause. Given these, Milind Muchala of Julius Baer India sees markets continuing to remain influenced by incremental news flows related to central bank actions, especially the US Fed, and inflationary trends. All intraday recoveries are getting sold off, and various technical levels are getting broken, making the markets more nervous. While there could be some technical pullbacks, the markets will continue to remain influenced by incremental news flows related to central bank actions and inflationary trends in the short term. Muchala also pointed out that FIIs seem to be holding one of the lowest net long positions in the recent times in the FNO segment, which could trigger some short covering in the case of markets. No wonder then that benchmark indices have gained close to 3% so far this week, as against 4% rally in broader indices. As broader indices see a sharper recovery after a steep knock, should one consider nibbling in the space? According to analysts, while investors dumped mid and small cap stocks as the markets turned choppy, these two segments could see good investor interest from a medium to long-term perspective.
I believe these cycles are, common in the economy and markets, and all these cycles proven to be, short-lived, or maximum they last for 8 months to 1 year. So I believe that the valuations have corrected. Sensex itself now trading at 20p on trailing basis, and a lot of individual small caps have corrected 30, 40, some of them even 50%. So as I've been always saying, this is the best time to rebuild wealth over the next 1 to 3 years. Within 3 months or so, the small cap will start performing very well.
Sujan Hajra of Anand Rathi, on the other hand, believes that the negatives have been overestimated by the markets.
That we also believe that all the three major calls, that is on growth, GDP growth, inflation, as well as the pace of monetary tightening, at this moment we are overestimating. The actual growth slowdown, the actual inflation, average inflation level, and the actual monetary pace of monetary tightening will be lower than what is being expected now. What is being expected right now. Consequently, we think during some point of time beyond the next 3 to 6 months, central banks will start slowing down the policy tightening. Inflation will turn around and start softening more than expected, and there will be some level of growth slowdown, which will make the policies, whether fiscal policy and other policies, more accommodative. Clearly, that is something which is positive for the equity market. So despite our concern for the near term, we remain positive on 12-month outlook for equities.
Therefore, as expectations mount that mid and small caps may outperform their large cap peers over the next 1 to 2 years, Chokalingam of Equinomics Research suggests that investors should check the quality of the management and the guidance they give. Secondly, investors should pick stocks with 5 to 10 years of listing history. He says one must analyze the balance sheet's strength before investing. In a nutshell, mid and small caps will likely outperform over the next 1 to 2 years as retail investors throng the markets in search of better returns, and as macro headwinds subside over the next couple of quarters. On Thursday, markets will track global cues, weekly FNO expiry, and March quarter results. Besides, initial public offering of Paradeep Phosphates and Ethos will also be eyed.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and reporting with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the markets and money, let's move on to the bustling lanes of Kashi, which are believed to be older than history. But for the last few days, two religious places which existed next to each other for ages in one of its lanes are in the news. A court has ordered a survey of Gyanvapi Mosque after a petition claimed the presence of Hindu deities inside it. The Muslim side, on its part, is claiming that it is against the Places of Worship Act 1991. Let's know more about this law. The year was 1991, and it was the peak of Ram Janmabhoomi movement. The country had seen communal riots in Gujarat, Uttar Pradesh, Karnataka and Andhra a few months ago, leaving scores dead, and P.V. Narasimha Rao was in the Prime Minister's seat. It was then that the Rao government introduced a law in an effort to put a lid on any future controversy arising out of the ownership and character of any place of worship in the country. This was introduced to prevent another Ram Janmabhoomi movement kind of controversy from erupting. The Babri Mosque in Ayodhya was raised a year later. While introducing the bill in Parliament, then Home Minister S.B. Chauhan had said that it will effectively prevent any new controversies from arising in respect of conversion of any place of worship. The law, Places of Worship Act 1991, lays down that the character of a religious place cannot be altered from what it was on August 15, 1947, the day India got its independence. So, if a building was being used as a temple on August 15, 1947, it cannot be turned into a mosque, church or a gurdwara. While Section 4.2 of the Act says any suit or legal proceeding with respect to the conversion of the religious nature of any place of worship existing on August 15, 1947, pending before any court shall abate, and no fresh suit or legal proceedings shall be started. The bill had met with vehement opposition from the BJP in Parliament. While referring to Kashi Vishwanath Temple Gyanvapi Mosque dispute, Uma Bharti had then said, "Was not the intention of Aurangzeb behind leaving remnants of the temple at the site of mosque to keep reminding Hindus of their historical fate and to remind coming generations of Muslims of their past glory and power?" A 5-judge bench of the Supreme Court, which had in November 2019 ruled in the favor of the Hindu litigants, had also quoted heavily from the 1991 Act. While holding the sanctity of the Places of Worship Act 1991, the bench led by the then CJI Ranjan Gogoi had said that they were making an exception in case of Ayodhya as it was an ongoing episode. The bench had said that history and its wrongs shall not be used as instruments to oppress the present and the future. The Apex Court had said that the Places of Worship Act 1991 is a legislative intervention which preserves non-retrogression as an essential feature of our secular values.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Over the years, 3 petitions have been filed in the Supreme Court challenging the Act, including one by Subramanian Swamy. All of them are pending. Well, that's all we have for you today. We will be back with more news and analysis in our next episode. Stay tuned. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.